Hey, Anthony. We are continuing our Form 5471 series, and I see you're wearing your Form 5471 suit.
You know, it worked so great for our last. This
did.
might be a thing. And now we're going to be doing other forms too, a 3520.
A different suit for each
Yeah,
form.
so I might have to. There's one it needs some alterations, but I'm thinking, if I can get that in when we start that series, we'll have that suit.
Personally, I prefer a man who has the cojones to pull off a double-breasted suit.
Oh,
This will work.
that's not me.
Okay.
That's not me.
So today, we've talked a lot about the information, trying to make sense of Form 5471, put all the pieces of the puzzle together. And today we want to talk about what if you haven't filed or if you've misfiled a Form 5471. You watch the series and you go, oh, crud, I should have done that. What do you do? So the first question is, I guess, why do you have to file Form 5471?
I think you have to look at what the IRS is trying to do, that they're trying to get control, and that it's hard for them to control what you do in another country. Mm-hmm. You invest in the United States, you have income in the United States, there's always the third-party reporting. W-2 or 1099 is what we're sort of used to. Mm-hmm. So domestically, unless, you sort of need two parties to be willing to avoid taxation, one not filing a 1099 and one not reporting the income in order to get it through. Whereas overseas, you're not going to get, a foreign bank. Well, that's sort of changing, but that's sort of changing now with FATCA. But a foreign, if you're earning money overseas by a foreign rental or something like that, there's not going to be a 1099 reported to your Social Security number or EIN at all. Mm-hmm. So the IRS, in order to sort of make it less likely or give it easier, if they suspect noncompliance, it's easier for them to open up things because they make this onerous reporting requirement. And really the hidden thing is, my guess is they don't really care so much about what's on that form, but the failure to file that form is what gives them an infinite amount of time to assess those taxes, so that you might think, oh, they'll never find that. And we've talked about earlier in the series, records stay around forever now. Mm-hmm. So that's something from 2004, your 1040 from 2004, that if you had a 54 filing obligation and you didn't meet it, the IRS could actually go crack open that 2004 to say, okay, let's take a look. Yep. We have a whole bunch of foreign bank accounts. We have this. We think this is what you've made. And now we'll penalize you on your failure to file. And by the way, we're going to ask you for your Form 5471, and they're going to do it for more than 1 year. Mm-hmm. And you're having a hard time coming up with it, and now they can assess you for multiple years. So it really gives them a great way to enforce through fear and intimidation.
Lovely. Mm-hmm. Can you go to jail for unfiled Form 5471s?
You could, but you're likely not going to. That usually the IRS, you would be going to jail for tax evasion, and it might, incidentally, you might have a Form 5471. And by the way, this also could happen a lot of times. People plead guilty to a tax evasion charge. That doesn't mean, and let's just say you did plead guilty to a restitution charge, that doesn't mean the IRS is done with you, okay? And there was one of the first FBAR penalty cases, Williams. A gentleman was engaging in tax evasion. He pled guilty to it. I don't know if he really was. Maybe he was looking at the cost of trial to say, look, it's really not worth it. You always have to realize that. When people are pleading guilty, they really might not be guilty, but they're just looking at the evidence and the incredible, what they have going against them, and they might just say, all right, I'm just going to plead guilty. Right. So that does happen. But it doesn't mean the IRS is done with you, because in Williams, after he pled guilty for an unreported account and tax evasion, they went and assessed him FBAR penalties.
Oh.
And it was sort of nasty because they assessed him an FBAR penalty for one of the years he pled guilty to for tax evasion.
So you're guilty and we're taking all your stuff.
And his attorneys, it looks like they said, well, there's no point in filing an FBAR because, well, they know about the account because we're pleading guilty. Mm-hmm. And I kind of see their point. Yeah. And they're like, well, no way would they be that crazy. Come on, no way would they be that sort of can we say the word dickish?
Yes.
No way. It's like, oh yeah, no, they did, and they got them with penalties.
And
so,
they were.
so that's always something to, that's sort of the other side of, the criminal part. Just because you have a huge criminal charge doesn't mean you're done. So you really want to take a look at everything to make sure that they can't have another way to really put the screws to you, because they will. I mean, I think that's the evidence is they will.
Yep.
They will act unfairly. They will punish you because they can't punish everybody else. So you're going to take all the punishment for everybody else in noncompliance.
Right. All right. Now, what if someone has missing 5471s? Would they have to enter into a standard offshore disclosure program or a streamlined disclosure?
Maybe not.
Okay.
Maybe not. Sometimes the Form 5471 all it needs to do is be filed.
Yep.
And that could take care of it. The issue is, was there unreported income related to it? And that is really that's the fundamental issue. Was there unreported income related to it? Now, a lot of times, what does tend to happen is people have to enter into a program because of something other than their 5471, that they have an unreported bank account, life insurance, foreign pension that forces them to go into the offshore. In that case, your 5471s will be part of they'll be part of your disclosure. And a standard offshore penalty, it doesn't matter. It really doesn't affect anything. Won't affect your penalty base. And we'll talk about this in a little bit.
Yeah.
In your streamlined domestic disclosure, not your foreign, but streamlined domestic, it can affect your penalty base. And so we'll run through a quick example. And I think we did a longer video on that, the full example of how that works. So the answer is you might not. You might have a simple problem. It might be really simple and straightforward. Lots of things at face, so lots of things moving on. So you would want to get a legal opinion on that.
Yeah, for sure.
Yeah.
If someone files delinquent returns only, isn't that a soft disclosure, the thing the IRS says don't do?
Yeah, right. So I just talked about the delinquent disclosures. Like all you're going to do, no, you're not going to go in a voluntary disclosure program. You're just going to file delinquent returns.
Okay, so that's not.
And so, like a lot of people would say, well, that's sort of like that soft disclosure thing that the IRS says, no, if you're non-compliant, you got to use a program or else. Well, the delinquent returns is a type of program. It's right there. The IRS has it on their website. If you meet these qualifications, this is all you have to do. The soft disclosure is when you're trying to avoid a 27.5% penalty by just filing amended returns, paying missing FBARs, if any. And that's what the IRS gets all up in a tizzy about. And we'll see some litigation on that, I'm sure, because the IRS says we can punish you if you do a soft disclosure because you're not cooperating. Well, I would say, they kind of are. The IRS is just trying to get more leverage out of the threat of FBAR penalties by forcing people to pay that 27.5% penalty.
And there's always the willful, non-willful IRS argument.
Right.
Is someone non-willful, is streamlined always better than full OVDP?
Well, here it is. Yes. The answer is it depends. And this is a very curious fact pattern. Let's suppose that you have unfiled 5471s and you have companies in, let's just say, Panama. And these companies are worth, if we look any way we look at this, they're worth $10 million at least. Okay, the most favorable valuation, meaning the lowest, $10 million. And let's just say your offshore bank accounts were, there's some money in there, $1 million. But really the asset, it was like the real estate. If it was a real estate, Panamanian real estate or something that was holding real estate around the world, the asset's really the real estate. There's really not a lot in a bank account. Well, there, you might want to go full OVDP because your 5471 count valuations go into your 5% streamlined domestic penalty base, whereas they fall out on your, and here's the catch too, your standard OVDP if you opt out. Commercial real estate does go into your penalty base in the standard, but if you opt out and you're saying, well, I'm opting out, the worst case is I get a 50% FBAR penalty on something that doesn't have a lot. Really what I'm looking to protect is this huge asset of real estate that has a huge portfolio. And I don't want a 5% on that.
Yeah.
So that's sometimes we end up doing the more complicated thing because it could save a lot of money. So you really want to look at the whole picture and look at all the moving parts because there's different penalty bases for each one.
It is like a puzzle.
Oh, yeah.
So yesterday we talked about dormant foreign corporations. If you have dormant foreign corporations, do you have Form 5471 problems?
Yes.
Oh.
Yes. And most people would think, the corporation's been dead. I haven't done anything with it. Yeah, it's on the books, but I haven't done anything with it. Why do I have to bother doing it? Well, again, your penalty could be $10,000 for not filing, but that's not really my concern. The $10,000 penalty is not my concern. My concern is that, again, your 1040 is open for assessment at any time. Why do you want to have that risk? And because the solution with a dormant corporation is, yes, you have to file a Form 5471, but if you meet the qualifications, and we did that yesterday in an earlier blog about the qualifications for meeting a dormant form of incorporation, it is just actually the 2 pages of the Form 5471 and a little bit of it. So it's very...
And just a scribble in the margin.
Yeah, you just put it in there, and it's right, it's right above, right, dormant. And then that's one way, and that sort of solves the problem.
Now, people, I think, are always a little weary about raising red flags with the IRS. So what should someone do if they realize they made mistakes? Do they just let them be?
Right, that's a common. Well, won't I bring more attention to myself by getting into a voluntary disclosure program, by filing these missing forms, by correcting it? Right now, the IRS doesn't know about me. And I think the analogy I would use, and maybe this is a little bit too graphic, but, we've all seen those, the videos of insurgents getting blown up in Iraq or wherever they are. And there they are. They're nighttime, they're running, and they're hiding behind, a palm tree or something. And you could see them. You like, look, we see you moving, and here comes a Hellfire missile in, and then we see the parts of you. And those people, you have to imagine, they felt pretty like, oh, they can't see me.
They totally can't see me.
Can't see me at all. So the thing is that you're investing overseas. You already raised a red flag. You've already did.
It's just a matter of time.
You're a U.S. person. You raised a red flag. I want to be subject to the laws of the IRS. Okay. You understand they're the meanest, nastiest organization in the world with the most amount of power to ruin you. Okay. So that's your red flag. And then the second thing is you're overseas. And so you have 2 red flags. And so what you want to do is take down those red flags. You want to take them down. And that is by being, getting rid of your big risk. Hey, here's my 5471, just the way you like it. See, I'm a good taxpayer.
Yep.
And then, really what they're going to do is to move on to somebody else who didn't do it. Because they're like, wait a second, here's a guy who's overseas, and okay, here's some information we got here. Oh, wait a second, we don't see any of the 5471s. And they know that's a huge opportunity to open up a case and turn it into a complete nightmare for somebody.
Compliance is key.
Indeed.
All right. Well, thanks so much for watching. You can like and comment below. You can also subscribe to our channel. You'll get updates on Form 5471 and other awesome tax info. Thanks for watching. IRSMedic, the law offices of Parent LLP. Real tax attorneys for tough tax problems.